So limited partnership agreements are agreements between limited partners and general partners. The limited partners are the investors in private equity. Now, we talked about these investors in a previous video. They are institutions, such as pensions, endowments, foundations, or individuals, family offices, or select high net worth individuals. The general partner is the private equity firm. And we're going to talk about the details of private equity firms in a following video. So the limited partner, the LP, and the general partner, the GP, have an agreement together called a limited partnership agreement to form a private equity fund. So this private equity fund invests in companies. Once it invests in a company, that company now becomes a portfolio company of the private equity fund. Now let's go back to the relationship between the LP, the investor, and the GP, the private equity firm that operates the fund. The LP has limited liability. And the LP does not give the private equity fund all of the money up front. So let's say it commits $50 million in capital to the private equity fund. Well, it might give $10 to $20 million of this capital up front, and then the fund, as the GP finds more and more investments, will call the capital from the LP. Now the LP is committed to keep the money and keep its promise to give all the capital for the length of the fund. And the length of the fund is usually 7 to 10 years, and sometimes can be rolled over and can be longer. The LP is not so stuck though, because there's something called a secondary market for private equity investors. And what this means is that the LP, if it's already made investments and it has future commitments, it could actually sell the investments it's made with the commitments to another limited partner in a secondary, in an LP secondary. And it could also divide it up in something called a structured secondary. An example of a structured secondary is the LP can hold on to the existing investments that the fund's made, but sell the future commitments. To learn more about LP agreements, you should check out the ILPA website. ILPA stands for Institutional Limited Partners Association, and it represents 300 LPs worldwide that have over $1 trillion of assets in private equity. And on the ILPA website, it shows forms for capital calls. It shows best practices for LP agreements, and much, much more.